Our next guest, you've gotten her great insights on CNBC, and now you get them here at Benzinga. I want to bring on Stephanie Link, who is a chief investment strategist and portfolio manager at Hightower Advisors. Stephanie, welcome to the show.
For having me.
Absolutely. I'm excited. No, we had such a great conversation last time when we talked about AI. And coincidentally, some of the things we talked about then have kind of started to play out today. So I want to, maybe bring that up as well. But give me your overall thoughts when it comes to cybersecurity market and the outlook that we're seeing.
Yeah, I mean, I think, and I've said this for a while, I think that cybersecurity, the total addressable market, is just as big as AI. And I think sometimes that surprises people. But there are two places where chief investment technology officers are spending money currently. They are spending it on AI because they're trying to figure out what it even means for their business. And they're forced to spend on cybersecurity because of all the potential damage. They can't afford to wake up one morning or one evening and have their business completely obliterated. So the two areas are growing double digits. And that's not to say that other places within technology that they're not spending, but it's more like 2 to 3% growth for enterprise,
Yeah.
even cloud. And then 12, 13, 14% on AI and non-cyber. And the cost of a data breach is up this year alone 10% year over year.
Yeah.
The average cost is 4.9 million, up from 3.8 million just in 2018. So it's grown pretty substantially to have a data breach, let alone the damage that it does. And 67% of organizations that we've talked to, that you read about, are deploying AI for cybersecurity. And that's because it lowers the time and it lowers the cost for the organization to use this technology. So they kind of feed into each other. And I just think that those are the two areas where you have to have some sort of exposure. You can own the ETF hack, or you can pick some of the stocks, and the stocks are a little volatile. So you just have to know and kind of brace yourself and kind of just buy them and just forget about it, because it's a trend that's not going to go away.
Yeah. One of the things that comes to mind when you talk about cybersecurity is the hack that I don't remember the exact name of it wasn't a dealership, but it was the company that kind of works with majority of dealers in the US. I mean, I have friends in dealerships, and it was the end of the month and they couldn't figure out the right amount of commission. They couldn't close deals. So you had folks that have been in the business pull out a pen and paper and being like, let me show you young guns how it's done back in my day. And you had that. And then of course you have CrowdStrike, which I want to get about, your insights on your purchase there.
Sure.
Of course, not a hack related thing, but still not a great look. I mean, the stock had gone down, I think maybe 50 plus points since then. Talk to me about your CrowdStrike purchase.
So I've never owned CrowdStrike because it was always too expensive for me. But we all know it's the number one player with the number one management team in the industry. We also know that they have the best in class technology in terms of security and efficacy on security. And so for me, when this announcement, this software glitch, which was a big one, when it was announced, the stock fell rather, as you mentioned, like 50 points. And I was just watching it. And I was just waiting to see what, more from the legal point of view, what might be the problem for the company. And it wasn't negligence. It really was a software glitch. They're certainly accountable. They're probably going to lower guidance as a result, because they're probably going to have to discount to their customers. I don't think, though, from what I've read, they've seen a lot of churn, maybe 1 to 2%. Again, probably going to come out and lower the bar when they report in 2 weeks. But I do think down 41%. This stock went from 22 times EV to sales down to 13 times. And for me, the way I like to invest is if I can get the best in class company in any given industry on sale, I'll do it. So I might be early, Zunaid. They may lower numbers and the stock may fall another 10%, but they actually may lower numbers and people say, fine, they reset the bar and now here we go. So that was my mindset with regards to buying that stock.
And, I watched your interview. It was like a podcast with Josh Brown. And I know you said this many of times whenever you're on CNBC, everywhere else, where people sometimes are like, oh, well, you missed a trade on NVIDIA. But this, I think, is a perfect example of how sometimes it's okay to not be involved with a stock if it's too high based on your own formula, because this type of opportunity, like you just got with CrowdStrike, may end up happening. So I know that's kind of been your strategy. And so far, it's gotten a chance of better value in terms of price point for
Yeah.
CrowdStrike. And I hope it works out. Yeah. You also have Delta and everyone else that are going to look for those discounts. That are going to look to kind of get some compensation. I think I saw somewhere where they were looking for like $10 Uber Eats gift cards or something really weird, but compensation is definitely something that you'll need more on that. Are there any other cybersecurity names that you're looking at in terms of buyer, or even in terms of like, I'm staying away from this unless X happens?
Well, I'll tell you, I had owned Fortinet and I sold it a little too early, but I did make a lot of money because I'd owned it for quite a few years. But they
Yeah.
stumbled. They stumbled last year 3 different times. And I think that they benefited from COVID and all the spend that happened, especially on firewall. But they were going through a transition from product revenue to services revenue, which is a strategy that I'm very popular about. I feel really good about them doing that. I just thought it was going to take a little bit longer for them to see and realize the monetization from the services piece. Well, they got it last quarter for the first time in 4. So
Yeah.
unfortunately, stock rallied a lot. I missed it, but it is certainly one that where the expectations are still really low, and they're like the number 3 player. So if that were to pull back, that's fine. But if I could get CrowdStrike down 41% from the peak, that's what I'm going to do all day long.
How do you deal with, so our viewers are retail investors or retail traders. And I know something we often talk about is kind of like FOMO, where you're like, a stock is going and you're not invested in it. I mean, you're dealing with millions and billions of dollars worth of strategy and holdings. How do you kind of deal with the mindset of, this stock has gone without me, I will move on, there are plenty of other opportunities?
So it's a great question. And I'll tell you, because I didn't, and I don't own NVIDIA.
Yeah.
Certainly I missed it. It was, great, great stock. I think it will be for a long time to come. But
Yeah.
what I try to do is, okay, who is the next best player in what's happening with AI? And so I actually got maybe a little bit lucky with Broadcom because I bought Broadcom 2, 3 years ago. And I just liked the fact that they had a more diversified revenue mix. So it
Yeah.
is AI and it's cloud, but it's networking, it's enterprise, and now it's software because they made the acquisition with VMware. And so I believe very much in the AI theme, as we were just talking. Missed NVIDIA, where else can I go? And I don't think I'm sacrificing that much in terms of quality of management, quality of product, quality of execution. In fact, I think they're neck and neck in terms of
Yeah.
all of those things. And in the meantime, the valuation is half of NVIDIA.
Yeah.
So got a little lucky getting into it before the VMware deal, because I think that really is when the stock really started to re-rate, because it's software, it's more recurring revenue, it's higher margins, higher free cash flow. So
Right.
that's the way I am playing it. And then the other way I play AI is through the memory guys. I don't think that people understand you need 6 times. I think we talked about this last time. So you need 6 times the memory for AI.
Yeah.
Lam Research, Applied Materials, KLA. I mean, these are names that are going to benefit substantially. And we haven't even really begun to see wafer fab equipment spend tick higher. We're getting like dribs and drabs of a little bit better demand, but nothing like what we saw at the peak. And so the valuation is also still very interesting. And Lam Research in 2 weeks ago, it was down 20% in 2 days after this whole yen carry trade unwind. So
Yeah.
I added to it because I think, again, best in class on sale.
And I'm glad you brought up the yen carry trade, because I mean, everyone thought it was the end of the world. I think we were down maybe about 4 to 5%. I don't exactly remember, a couple of Mondays ago,
Yeah.
and you had folks coming out of the woodworks being like, "I told you we'd get a down limit." It's like, well, one, you said that 3 years ago. You know what I mean? Everyone's 100 times the last 7 predictions have been correct in terms of a crash. But what are your thoughts on the yen carry trade? Do you feel like the worst is behind us? Is it overreaction? Are you still concerned, just in terms of the general market
Yeah,
analysis
I
of it?
mean, it was certainly a surprise. The velocity of the move down was really quite extreme. And Japan, we know that was down 12% in one day. But I think what's interesting since then is a couple things. One, the BOJ backed off of their monetary policies. Oh, we're going to raise rates, which, by the way, I don't even know why they did feel like they had to raise rates. They don't have an
Yeah.
inflation problem at all. Their labor market is fine. But that be that as it may, once they backed out and backed down from that monetary policy kind of mistake, if you will, their market stabilized. In fact, it recouped the entire amount that it lost. And then at the same time, we saw better economic data here. We
Yeah.
got ISM services, that was expansionary, with new orders expansionary, with employment solid. We had two initial jobless claims, which we know we get weekly, and they were fine. Certainly, you're seeing a slowing down of the labor market here, but it is
Yeah.
certainly not a crash by any means. In fact, the 4 week moving average for weekly jobless claims is running about 240,000. And during recessions, that number gets as high as 350 to 375,000 weekly
Wow.
jobless claims. So we're nowhere near a recession on the job side of things.
Yeah.
At the same time, we got a lot of progress on inflation. I mean, we went from 9.1% CPI to 2.5 in 2.5 years. It's
Yeah.
under control. So, and the labor market is softening a little bit. So now we're going to probably start to see an easing cycle. And we all know that phrase, don't fight the Fed, not on the way up and not on the way down. And when the Fed usually eases, that's usually very positive for stocks. And then lastly, long-winded answer, but last we have earnings. All the better
Yeah.
economic data suggests we're growing at around 2.5% in the US. That's pretty good. And that's led to 11.8% earnings growth. So stocks have been actually the earnings have been going higher, and stocks follow profits, as we know. So that's why I kind of felt like it was hard to buy 2 weeks ago. But I
Yeah.
thought, as I mentioned, I had a couple of stocks that were just hit so hard that where they just reported good earnings, they beat, they raised, the
Yeah.
valuations had compressed. So that was the opportunity, and I still think you can pick and choose at a couple of
Yeah.
different sectors, non-tech.
A- And with that yen carry trade, I mean, the 1-2 punch was also, Warren Buffett selling so much of his Apple stock that it was like, oh my God, the greatest investor ever is selling. And we have this. This has to be the end. And,
Yes.
things just kind of worked for folks who may have been looking for some downside.
Okay.
Last question for me, election cycle, right? Back and forth in terms of who the president's going to be for us next. No matter who wins, what are some trade ideas that you have that folks can maybe start to think about as we get closer and closer to November?
Well, I think what will matter more than who wins as president, it'll be what happens to Congress. Is it a mixed Congress? If it's a mixed Congress, the markets are going to like that because unfortunately, a mixed Congress, not a lot gets done.
Yeah.
So keep an eye on that. That's number one. Number two, and it does seem like it was really in favor of Trump just a couple of weeks ago, and now
Yeah.
it's leaning a little bit more balanced. So we'll see. But
Yeah.
a lot of it is noise and a lot of it is opportunity. I will tell you my still favorite theme beyond cyber and AI, my still favorite theme is anything tied to to power, to grid, to data center.
Yeah.
So companies like Quanta Services, Eaton, GE Vernova, those are companies that I think are going to benefit from the long run. They may get hit if Trump wins because people will say, "Oh, well, the all the infrastructure, all the bills that were passed last year, they're going to end. They're not going to be recognized." I don't think that's that easy, and I think we are a nation that needs to spend on the grid. We haven't
Yeah.
spent any money on the grid in incremental money on the grid
Yeah.
in 50 years. We are going to spend $4 trillion between now and 2050 on grid and data centers. And so that is a theme that I think in some sort of dislocation, if we get it, I think you want to be buying those names just because the theme is so incredibly
Yeah.
powerful. No pun
I,
intended.
I think this past weekend, Kevin O'Leary said that no matter who wins this election, you can expect crypto regulations. And so, on that similar train, no matter who wins, we're going to spend money on grid. So, we have to if we want to stay ahead of the game in the space of AI, crypto, and all that good stuff as well.
Absolutely.
And as always, thank you so much for your time, Stephanie. I really appreciate it. And I look forward to more of these conversations.
Thanks so much for having me.
Absolutely. You got it. That is Stephanie Link, who is a chief investment strategist and portfolio manager at Hightower Advisors.